The full cost accounting assessment tool was developed by CBCL Limited for the Water Resources Management Division of the Province of Newfoundland and Labrador's Department of Environment and Climate Change. A user guide is also available to assist in understanding each portion of the tool, and this guide can be found on the Water Resource Management Division's webpage. This video will demonstrate how to use the full cost accounting assessment tool, which was developed to help the owners of public drinking water systems in the province of Newfoundland and Labrador. It provides information for establishing water taxes based on annual operation and maintenance costs, infrastructure upgrade costs, and annualized costs of infrastructure replacement or renewal. In order to demonstrate how to use the tool, we will complete all parts of the tool using a fictional community. The tool is comprised of a single Excel workbook divided into several editable worksheets. In order for the tool to work correctly, you may need to click a Enable Macros button at the top of your page. On the title page, we will write down the community name and select a geographic region. Just select the region that is closest to your community, and we enter the current date. And then we hit begin. There's a number of buttons at the bottom of each page that allow you to scroll forward and back in the tool. The table of contents here lists the each section of the tool, which gives a guide of what each page does as well. A more detailed explanation of each page is included in the user guide, but the table of contents gives you a brief summary of which pages are for information, which pages are used for data entry, and which pages provide the results. Next page provides a description of the full cost accounting assessment tool in brief detail. It really just explains what the purpose of the tool is, which is to help the users compile and predict operation and maintenance costs for existing drinking water infrastructure, capital costs for new infrastructure, and infrastructure renewal and replacement costs. It should not be used to establish capital budgets, but rather as a check or a order of magnitude estimate for operation and maintenance, potential capital upgrades, or infrastructure renewal projects. There are some instructions on this page which provide guidance on different parts of the tool and general information of what is on each sheet, including how and where the user should enter information. And the next page just provides some limitations and explains that assumptions were made in order to develop the tool. These assumptions were made in combination with available historical capital project costs and O&M cost data from communities in Newfoundland and Labrador, but this data may not be representative of costs for specific O&M and capital projects in a given community. But it is used to provide an estimate, a high-level estimate for these costs. The next page is the Start Selection page. The tool has 3 sections. Section 1, the analysis of existing costs, is used to establish water taxes to fund the operation of the existing water supply system. Section 2, the analysis of potential upgrade costs. And Section 3, the evaluation of annual infrastructure replacement costs on an annualized basis. Each of these sections can be completed on its own. So from this page, we can start any of the 3 sections, but for the purposes of this example, we'll start with section 1 and work our way through. So on this page, we enter the name of our system. It has one surface water supply, and we enter a permanent service population for our community. In our case, it's 950. Existing system flows are used to estimate costs. If we have flows, average daily flows, maximum daily flows, or peak hourly flows, we can enter those values here. If we don't have the data, This tool will estimate flows based on the population provided and average flows in the province. So in our case, we can provide some input on the average day flow. We'll say that it's an average flow of 500 meters cubed per day. The next page asks for us to provide some additional description of the existing water supply system. So it asks for the type of disinfection systems in use at the community. Sodium hypochlorite, chlorine gas, on-site hypochlorite generation, or calcium hypochlorite or UV disinfection. So our community will have chlorine gas disinfection, and it will also have an inline filtration system at the existing treatment facility. Questions here on whether the distribution system includes supplementary chlorine booster stations. So if we have a booster station for chlorine boosting in the community, we can select that here. In our case, we'll leave that at no. If we do have one, we pick what fraction of the community receives water from the chlorine booster station. The next subsection here is asking about existing pumping systems. So if we have a groundwater system well supply, then we might have groundwater pumping. In our case, we have surface water. So we could have low lift pumping from the source to the treatment building, or high lift pumping from the treatment building out to distribution. So in our case, we have neither, but perhaps we do have a distribution system pressure boosting pump, which we would select if we have a boosted pressure zone within the community. So below here, we pick what portion of the distribution system has a pressure boosting pump, and we'll say 50% of our community has distribution system pressure boosting. The next page asks for descriptions of existing expenditures. So these would be actual expenditures based on the past year. The expenditure categories are broken down into these 5: source of supply related to expenditures, pumping and power, disinfection and treatment, transmission and distribution, and administration costs. Further down on this page, there are brief descriptions of costs which might be incurred within each of these categories. And there's also buttons here that lead to detailed descriptions further down on the page for types of expenses that might count under each category. So if we just scroll back up, once we compile this information, this is key to generating an accurate output from the tool. But if we are able to compile this data and enter it here, we can say that our source of supply expenditures on an annual basis are $5,000. For pumping and power, we may say that it's $10,000. Disinfection and treatment, $25,000. Transmission and distribution, we can say $75,000. And for administration costs, we'll say $20,000. Again, these inputs should be as accurate as possible, even if they are not accurate within each category. If the total actual expenditures are accurate, then that is what's most important for the tool to output an accurate description of O&M costs. Once we finish inputting the expenditures, the next page asks us for existing revenue. So we have a community with 950 people, but this page is asking for the number of customers that pay either water taxes, combined water and sewer taxes, industrial commercial customers that are charged differently, or any other revenue that is applied directly to the water supply system operation and maintenance. So we might have 300 customers that pay a water tax of $150 a year. We might have another 100 customers, and those customers pay $300 a year because they have water and sewer, and 50% say of that tax goes towards water or sewer operations and not to the drinking water operations. Might also have 10 industrial or commercial clients that pay a flat rate of, say, $1,000 a year. And we have no other revenue specifically for water supply system operation and maintenance generated in our example. So we have a total revenue of $70,000 a year. So in this case, our total revenue is summarized here. We have $70,000 coming in. Our annual expenditures are $135,000 based on our inputs, which means that our existing revenues fall short of the operating costs by a wide margin, $65,000. This is summarized in the graph to the right, existing revenues and expenses, which just simply compares the revenue we've input into the tool and the expenses that we've claimed as being incurred into the tool. The difference between the revenue and the expenses is our gap, funding gap. So if we look at the evaluation of the existing costs, the tool actually provides a recommended annual investment based on the characteristics that we described. So the population size, the type of treatment, type of pumping, and the water source. So in this case, our actual expenditures for source exceed the recommended investment for source. Pumping far exceeds the recommended investment. Treatment and disinfection is slightly less. Transmission and distribution is slightly more. Administration is more. So the graph to the right of that shows the actual expenditures versus the best practice recommendations for annual investment for each category for a system of this size and having these characteristics. So we can go back a little bit through to our existing expenditures. Maybe we want to make this a little bit more realistic when we do the comparison. We'll say that our actual expenditures for transmission distribution are 1,000, for administration are only 10,000, and water treatment perhaps is only 10,000 as well. And then for existing revenue, if we go back and say that our water customers are paying $200 a year, that brings our total revenue up to 85,000. And then we have a look again back at the summary table, and we can see that our revenue and our expenditures balance out. So we don't have a gap between our reported revenue and our reported expense. It's a net zero balance. But in this case, we have a difference between the actual expenditures totaling 85,000 and the recommended annual investment, which totals 107,000. So this may be an indication that the community should consider increasing the budget for operation and maintenance and spending more. The idea being that gap is likely preventative operation and maintenance practices that should be followed, but may incur more cost. So when we look at this third section, which is the gap analysis, we have the current annual water tax on average per customer that we input into our existing revenue page. We have the minimum to fund existing operations, which, as we saw, is the same as what we're bringing in. So the gap to fund existing operations is nil. We also have the minimum to fund recommended investment. That would be the best practice O&M cost, which is $262 per customer, which would require a $55 increase on average per customer. And so, this page in the tool is describing that the water taxes are sufficient to fund the existing operations, which means that the revenue and expenditures are equal. And just mentions that if operation costs are increased, the tax rate should be reevaluated, may need to be increased to fund new operating and maintenance practices or best practice operation and maintenance practices. That's part one of the tool. We can click here if we want to go right into part two. which is an analysis of proposed upgrades. So for communities that are considering upgrades to the water supply system, we can use this tool to develop an estimate, a cost prediction of the potential upgrades. This is not meant to substitute for an engineering study of potential upgrades to the water supply system. And those types of studies would produce more accurate results because they would take into account site-specific factors. However, this does provide a high-level estimate for the types of upgrades that we can look at with the tool. So for design parameters for the proposed upgrades, we can change the population serviced or the average flow, but this pulls in the population from our part 1 that we already put in. And again, we don't have to input any flow data. The tool can estimate that, but if we know that our average flow is 550 meters cubed a day, we can enter that here. The maximum flow and the peak flow, if we have those, we can input them. If we don't, the tool can estimate those based on the flow data that we provided, the population we provided. So for the potential upgrades, we can select a design life between 15 and 30 years. So we'll say 25 years. We can also estimate the population growth based on census data if we have that. So for example, we could say the 2016 census had 940, 2011 had 930, and 2006 had 920. So this census data suggests a 0.2% per year increase, and we can select that below, or we can choose to say we expect a higher growth rate at say 1% per year for the system service life, which is we picked as 25 years. So based on those inputs, our current population and flow is to the left, and to the right we have future population, which is increased over 25 years, and an average flow which is increased accordingly. So the next page here, the description of proposed upgrades, includes potential upgrades to disinfection or treatment, upgrades to distribution system, extensions, new water storage, etc. So for our proposed upgrades, we can say that we're going to use chlorine gas, but it's going to be the existing chlorine gas disinfection system. So there's no upgrade to our disinfection system at the treatment plant. We already have an inline pressure filtration, so we'll say that's existing. But for the purposes here, we're going to say that we're adding a new pH adjustment system, and perhaps we're also going to add an iron manganese removal system. In order to house the new treatment processes, the tool asks if a new building is required, so we'll say yes. And we'll say that the new building is going to house the existing chlorine system. It's going to be moved over to the new building, and it's going to house the new pH adjustment system. It's going to house the old pressure filtration system that's going to be moved over, and our new iron and manganese removal systems. Yard piping is referring to buried pipe near the treatment facility. If we have an estimate for how much buried piping or how far away the treatment plant would be from existing water main, we can add that information here, and same for wastewater, the wastewater collection system. If we don't have that, we can leave it at 0, and the program assumes a small amount, 20 meters of piping for both sides. For pumping upgrades, we can say if there's any low lift or high lift pumping that's going to be added. So we could say that the high lift, the previous system had no low lift or high lift pumping, but perhaps the new system will have high lift pumping. And if a new building is being constructed to house the pumping systems, yes, the high lift pump will be in the new building. Here we indicate if the proposed upgrades include a new treated water storage tank. So let's say yes. the storage tank will be used or won't be used for fire storage. We'll say that no, it's not going to be used for fire storage. Maybe this is just going to be used for as a clear well and not as a storage tank in the community for fire protection. So if we said yes, we could indicate the volume that's going to be needed for fire storage, or we could let the tool use a default amount, which would be 1,250 gallons a minute for 2 hours. Below, the tool asks for any upgrades to the distribution system. So here we can say yes, there's going to be a new distribution system extension. It's going to be 100 meters long. There'll be 5 new valves and 5 new hydrants as part of that extension. So this page in the tool, the cost curve predictions, gives us the estimated cost for the upgrades that we've described on the previous pages, and also gives us the chance to change the number of customers and the annual water tax that we put in on part 1. But if that hasn't changed, we'll leave that the same. If we have an engineering estimate for this project, we can enter that here, and that will wipe the calculated tool approximate value. In our case, we'll say we don't have an estimate, so we'll have the tool calculate the value. The tool also allows us to put in a portion of a project that's going to be funded by government or external, any external funding. So we'll say it's 90% funded, and then the tool fills out the summary sheet here, which says the capital cost for the entire project is going to be somewhere between 2.9 and 5.3 million, with the balance covered by the community after government funding between 290 and 530,000. So this is calculated based on historical costs from other projects, but certainly any given community may have project costs that fall outside this range due to site-specific conditions. The bottom of this sheet also provides predicted operation and maintenance costs for each of the items. So the source of supply O&M costs haven't changed from part 1 because we haven't upgraded the source of supply as part of our proposed upgrades. Our pumping O&M costs have gone up. Our treatment, our transmission and distribution, and our administration costs have all gone up as well. So our predicted O&M costs for our new system are up to $227,000 per year. The next page of the tool provides the financing results. So on this page, we can insert a value here for reserve funds that are going to be used to reduce a loan amount, a loan being taken out for the community portion of financing for the upgrades. And so we could say that there's a say $100,000 reserve amount that's going to be applied towards the community portion of the project costs. And for the remainder of the project costs, the community will take out a loan over, say, 25 years at 3% interest rate. So the graphs on the right here provide what the annual loan payment would be for the 25-year loan amortization period. This top graph provides the cost for the loan by itself. In the bottom left, we have the total cost to finance the loan, as well as the operation and maintenance costs for our proposed upgrades and our existing operation of the water supply system. And the graph on the bottom right here provides the current versus the required water tax needed to fund those O&M and loan payments. So on the left here, there's a summary that gives the current annual water tax per customer. That would be the average customer, including our water and sewer and our industrial customers. So the average that we input into the tool was $207 per year. And the recommended average annual water tax to finance these upgrades and the new O&M costs is up to $600 per year. So the tool summarizes that the average annual water tax would need to be increased by close to $400 per year to completely fund these upgrades that we've considered. So that's the primary output for part 2 of the tool. Part 3 of the tool is added to allow the user to consider infrastructure replacement costs. This is a little bit different from new capital project or proposed upgrade costs, in that there are many assets, existing assets in the water supply system that may need to be funded, replaced in future years. And so this part of the tool is allows the user to tabulate up these assets and their respective remaining life and replacement costs. So in this tool, we can click the drop-down menu here, select an asset that's existing for the system. In this case, we'll say a concrete dam. We add the year that it was built, so we'll say 1975. According to the book life, there should be 29 years remaining. If we don't agree with that, we can input a different life remaining. For concrete reservoir and dam, we don't have an estimated book value because it's too highly variable. But if we know that the replacement cost is $1 million, we can add that here. We have to add a bank interest rate and a construction inflation rate here. And we can say that when it comes time to replace this dam, we can estimate a funded portion that will come off the community cost. So we'll say that this dam replacement is 90% funded. Once we've input those values, we click calculate for this asset, and the tool will spit out the annualized asset replacement cost, the unfunded replacement cost for this asset, and then these two values over here, the totals, will be used when we go back up to our list here and select another asset. As we click calculate for this asset, the asset goes into the table below, which keeps a running tally of all the infrastructure assets that we've inputted into this part of the tool. And there's also a recommended average annual water tax, which includes both the previous annual average water tax for the existing O&M plus proposed upgrades to the system, and the infrastructure replacement annualized cost. So if we go back to 2.7 financing results, the recommended average annual water tax was going to be $598. When we add in the annualized cost of the dam replacement, that's up to $605. So we go back up to the top to put in more assets. We can select perhaps water treatment plant concrete structures, which have different estimated book lives. The book life for this might be 9 years, but we could say we expect another 20 years, and the tool will use this remaining life. The suggested book value for replacement here is $500,000, but that's going to vary significantly depending on the asset. So we'll say $200,000 for our water treatment plant structure. We'll leave the interest rates and the funded portion and add that to our total below. So we can continue through and add a number of assets. We'll say some ductile iron mains from say 1980. We'll use the book value, so we'll remove that 20 years, and we'll say there's $400,000 worth of ductile iron main to be funded at the same rate again, 90% in 40, 45, 46 years. Go through again and add some PVC pipe, which is more recent perhaps, half as much. Add that to our list. We'll go down to our, say we have a metal storage tank, and The replacement cost is suggested at 1 million, but we'll say we know that it's going to be approximately 5 million for this asset. And again, the same inflation rate to calculate. If we hit this twice, we can go down onto our list here and see that one of these was added in error, and we can hit the clear button, which will delete that line item off. So we can go continue through this asset list and put as much information as we like for valves, meters, hydrants, other buildings, other assets that should be included as part of the water supply system asset list if we want to consider them for infrastructure replacement costs. And as these amounts tally up, those totals are added to the previous tax increase. And as we can see here, the recommended annual average water tax is up to 614. If we want to really demonstrate how much an upcoming expensive project might add to that, if we wanted to fund it, we could say that there's a pumping station, which is older side, say 1980, maybe we'll say 1970. And if this pump station cost is going to be $300,000 and it's not being funded at all, let's say the portion is going to be 0. Funded portion is, okay, we'll go down to 5% and hit calculate. We can see that the annualized asset replacement cost for this is quite a large amount. That's $31,000 per year over the next 9 years, and the unfunded amount is nearly that. So that pumps up our total unfunded annual cost by a significant amount, up to $36,000 a year, and pumps up our average annual water tax up to $686. So the more assets we put in here, the more annualized unfunded asset replacement cost will be added, but this could be considered costs that normally fall under normal operation and maintenance, but we're separating them out a little more clearly using this tool than we would otherwise have. Hopefully this helps the user understand how to use this tool, and thanks for your attention.